What is up, everyone? Welcome to another edition of the Morning Grind. And we got a special edition today. No, I'm not Stevie, but you know what? I'm a little bit more prepared for Stevie for this one. We have Mike Feuerstein from DFS Accounting to answer all the questions we can get through in however many time, whatever we can get through about your DFS accounting, your Rainmakers accounting, your gambling accounting. Maybe you get into crypto, NFTs, who knows? I know a lot of you guys are into that, but we're going to figure out as it goes. But yeah, got Mike Feuerstein from DFS Accounting. How you doing over there, buddy?
I'm doing all right. I'm hanging in there right now. It's as you probably know that it's a hectic time. Busy season is on the way. We only got 20 days left to file, little over 20 days. So if you guys, anybody out there, if you haven't filed your taxes, I suggest you do that before the deadline fast approaches.
Yeah. No, I still haven't, and I'm having a kid the day before tax day, so I probably should get on filing an extension. I almost certainly am going to file an extension this year.
Yeah. All right. Sounds good.
Yeah, but I mean, I can knock out an extension in 30 minutes because I have way too much experience in that. But yeah, let's just go ahead and get right into this. So I know that, like, obviously legalized sports gambling in some states has only been available a few months, some only a few years, but it hasn't been around that long. And there's been lots of regulation, lots of different changes in how it's reported over the years, especially with the Online Gambling Legalization Acts. So how do you report gambling winnings?
Right. Ultimately, long story short, I mean, point blank, if you guys are just going to be, playing recreationally, right, and you're on a couple sports books and you won some money, you're going to be reporting it on the schedule called Schedule 1. Okay, Schedule 1, other income. That's where majority of the recreational gamblers out there that we be reporting. And then if you have losses, right, maybe one sports book has a loss, the other one you got winnings, you would report your losses as an itemized deduction on your Schedule A. Okay, so this will be propped in your itemized deductions, similar to mortgage interest, similar to real estate taxes. If you own a home, you'll total all those up, and hopefully you're above the standard deduction. But you only can deduct losses to the extent of your winnings. So that's the first part about reporting gambling winnings.
Okay. All right. So yeah, obviously report the income and then report the losses. But that can get a little tough sometimes. Sometimes you are using the standard deduction. Sometimes you're itemizing deductions. It's different from person to person, your income level, all that stuff. So sessions, like, I know there's regulations on what sessions are, because obviously gambling throughout the course of the year, you have different sessions. Can you explain to me how exactly those work for recording your gambling winnings?
Right.
I don't know if I've even used those that much, because this is my full-time job. Like, this is my full income. So I'm a whole different scheduling file. But the average gambler who's just doing this for fun, throwing down a couple of bets, may win a 10-leg parlay and have something to report. How do the sessions work?
Right, exactly. And the sessions is going to, that's the idea and the concept that's going to get everyone confused, right? This is the gray area. These are the rules that were established, 10, 20 years ago, when people were actually physically going to casinos, physically going to racetracks and placing their bets, right? And they're walking away from the slips. And you're sitting at a backrack table, right, or a slots. There is a defined moment where you're having an ascension of wealth or descension of wealth. Hopefully you're ascending and you're making money. And that after, a period of 3, 4, 5, heck, maybe even 12-hour stint, you are done, you cash out, and there is a defined period in which you created a session. And what the IRS said is that during that session, during that time, you could net your wins and loss together. So if you're betting, 1,000 times during that, 1,000 blackjack hands, you don't need to report each and every one of them. You get to net that together. And whatever happens, whatever occurs, you either put it in your win column or your loss column. Okay. And what the IRS has stated is that you then accumulate your sessions over time, over the period of a year, right? And you total up all your wins, your winning sessions, and then all your lost sessions. And that is how you report your gambling winnings that we just talked about in the first question here. But here's the thing, all right? We're not going to a casino placing bets, okay? We are placing bets on our phone, and we're placing bets continuously every single day. And well, some of us are, right? And what happens is the lines, the idea of session, those lines get blurred, right? When does the session start? When does the session end? And that's where the idea and how you report your gambling gets kind of ambiguous to say.
Yeah. So what is, from what you've seen, or is it really not defined at all? Like, what is a typical session that you see? Obviously, the longer the session, the better. Like, if you have a session, if the session is a full year,
Correct.
that makes it really simple. Like, you just report your overall winnings, and it's already in there, deducted on all the losses. So what is a typical session that you kind of look at, or is it very individual to individual?
It is very individual to individual, right? Because we all have our own betting schemes, right? Some are bettors, arbitrage bettors. Some, play the prop bets, things of that nature. Some individuals only bet specific sports, right? If you're an NFL bettor and you know that it's very clearly defined games on Thursday, sometimes Saturday, Sunday, Monday, and it's really tough to say, hey, I'm betting every single day, when really you're only betting 2 or 3 times a week. So really what happens is, and what we like to do is we like to talk to the individual or talk to the client and say, all right, listen, let's take a look at how you are betting, right? If you're telling me you are betting continuously every day, if you're telling me that you are betting across multiple sports books, you really can't define how much you've won that day, because you're using those proceeds that you won that day to then calculate and determine your bankroll and determine the level of your bets and things of that nature and your units for the next day, then you're continuously having this ascension to wealth. And that's where we come in and we trying to figure out if you're an annual session or if you're a monthly session, right? Or maybe there was a time where you went from January to February and you're betting every single day, but you stopped for whatever reason. You have to look at the rules and say, hey, if I have a clear defined session from January, February, that's going to be 1. And then, and so forth, if I started out back in August. So it really depends on the individual, their playing style, and their volume.
All right. Yeah, something to look into, something I'm sure you guys can talk about with them. Let's move on to, a lot of people assume daily fantasy sports is gambling income.
Yeah.
I've had this discussion with so many people, including a lot of accountants, who are like, DFS is not considered gambling legally. It's why there was giant cases in New York and Vegas. Like, from a federal standpoint, it is not considered gambling income. It's considered a game of skill. So how is it considered by the IRS as income? Is it gambling? Is it regular? Like, how is it supposed to be treated?
Right. And I agree. It is a game of skill and not luck. And what happens is this, right? There's 2 battles here, right? You have the operator battles that are trying to become legal in states and say, hey, we're not gambling, right? This is a prize pool. People are putting in their money in. There's analytics involved. There's statistics involved that people are then and game theory, things of that nature. But here's the thing, that's them. Now we have to worry about us. And us, the problem is the IRS had recently requested support and analysis in regards to a private letter ruling. Okay, and this happened in 2020. And what happens is this: these letters, these reports that are prepared by IRS agents, things of that nature, they basically just put a position. They put a position out there in the ether and tell people like, hey, we've identified DFS and we analyzed it, and based on our rules and regulations, we deemed it that it's considered gambling income. Okay, but here's the crux of the situation: it's not rule, it's not IRS law, but it is something where the IRS and the IRS agent can hang their hat on and say, hey, we have this document right here. It clearly states that it's gambling. So what do you do as a tax preparer, right? Well, what we say is that you've got to, unfortunately, this is out there, and there is a position, even though it's not law, that DFS is gambling. Then we, in a conservative stance, say, yes, we have to consider DFS as gambling, and then follow those rules.
All right. So yes, they follows those rules. potentially goes back to the whole sessions thing. And then
Exactly.
what do you consider a session? Some players only play baseball. Some players, a lot of people only play football. Some people only play basketball. So something to consider when you're looking into that.
Now, another thing too, in regards to sessions, right, and another unique situation is that the DFS operators are going to be throwing out and sending you guys a 1099 miscellaneous. So the operators are automatically going to put it on as an annual session. Okay, you're going to get the net result if you've won that year on that 1099 miscellaneous. Now, what it allows you to do is, because we're considering gambling, or at least our position, right? There are a lot of accountants out there. Everyone reads the rules a different way, but our position is that we're going to be advising people that it's gambling. Then you can offset losses, against that gambling. Now, if you're a recreational gambler, like I said earlier, it's got to be on your itemized deduction Schedule A.
Yeah, and so you brought up 1099 MISCs. I remember back when, before sports gambling came around, I was strictly a DFS player.
Right.
Like I was playing on 14 different sites. At the end of the
Nice.
year, like I'd be expecting anywhere from 8 to 15 different 1099s, depending on how I did during that year. But gambling, it's obviously very, very different. Like I have not received many W2Gs in terms of gambling because there are certain thresholds you have to. You can make a bunch of money and not get a 10 or a W2G. So it likes to be something people are like, oh, I don't have to report anything. I never got any tax forms for it. Or someone hits a massive parlay, they get a W2G for 120 grand, and you're like, I've made like 10 grand. I lost a lot of other parlays getting towards that one, but this one specifically happened to fit the criteria. So what is the criteria for W2G, and how is it different than a 1099 MISC or a 1099K?
Yeah, exactly. And so, the documents have their own unique rules and what gets reported on. And I personally hate the W2G. And I really dislike the 1099K, and we'll get into that in a little bit. The reason why is that, the backtrack here, how does a W2G get reported, right? Well, there's these things, or these ideas called reportable transactions. Okay, so there are certain thresholds or certain actions that have to occur that the IRS outlaid for a W2G to be reported. The biggest one for sports betting, what I've heard from sports books is that they're going to send out a W2G on a specific wager in income if it's 300 to 1 odds and over $600. Okay, and like we were talking, right, that barely happens in the sports betting world unless you have a 15 or 16 leg parlay. Or I saw the other day there was an exacta hit on the Final Four for men's March Madness, and that was, that those odds were incredible. So you're really not going to get a W2G. Okay. Now, if you do get a W2G, this is why I don't like it, because that W2G only represents one instance in which your wager became a reportable transaction, right? It doesn't tell you what happened throughout the whole year, right? A 1099 miscellaneous, it's an annual session. So you're going to get the net result. Okay. Hey, this is my net result. Boom. Very easy. I'm going to put on my tax return. But a W2G, you could get a W2G on a 15, 16 leg parlay hit of $50,000, but you could have finished up $50,000 in the hole, right? Because you were placing side bets and things of that nature, and it really didn't go through. So, the W2G, you guys will rarely get that in the sports betting world.
Yeah, I mean, like I said, I've gotten it twice. I got it when I had a jackpot on a slot machine in Vegas.
Yeah,
which like it was $1,400. It wasn't even that much money, but it was like a $5 or $2 or $1 bet, whatever it was, for the slot machine. So they hop by, get my information, then I get my money. The other one was DraftKings World Sports Betting National Championship. I cleared $250K off of 10 grand, so it is the threshold. And
exactly.
Like
very nice.
Yeah,
there are other reportable transactions, right, that are specifically for slots, right? If you hit a jackpot that's above $1,200, you're going to get a W2G, right? I just didn't include those reportable because it's not applicable to the sports betting world.
Yeah, no, if I hit my 1,000 to 1 Oklahoma City to win the finals,
Right.
Even though I put a $20 bet and I will make 20 grand off of it, like it'll be a reportable transaction. But do I have to report a full 20 grand on that site? Maybe more, maybe less, depending on what the rest of my bets did and what the sessions are. So it's very different. So knowing all this, like knowing obviously you don't want to just automatically report the W2G, you need to figure out your sessions. What are the ways you've seen? Give me some examples and what they can do to reduce the income and maximize sessions, and like what they can potentially do if they are a professional gambler like me and not just a casual gambler who this is rarely going to apply to that much.
Right, exactly. And that's the other world, and that's the other side of this, right, is becoming a professional gambler and what goes about this. So obviously some people have an edge, and a lot more taxpayers are going to be saying, hey, I could do this full time, or they invested, 30, 40 hours a week and a material amount of money to gamble. So if you have the factors in that, and then you can establish that you're a professional gambler, then we would put you on a form. You would be reported on a form called a Schedule C. Okay, and the Schedule C is a form that that's on your 1040 tax return, and that form is for multiple businesses. Right, it could be any contracted work. That's where it houses business. And what you can do is you could directly offset your losses with your income, right? Whereas if you're a recreational gambler, you have your income on one side, right? It's an above the line item and it's income. And then you put your losses on another side of your tax return as an itemized deduction. And you talked about the standard deduction. Right now, the floor is really high. A lot of times people won't even use those losses, right? But if you're a professional gambler, you have to put it right here, right on the Schedule C, and you have your wins and your losses. Now here, and in addition, you could offset your income use applicable business expenses, right? Telecommunications, if you're traveling, right, to a live final, things of that nature, meals, right? And in a home office, if you have set something up, and computers, things of that nature, you could offset your income with those deductions. But you cannot go below zero. You cannot report a loss. So even on the professional gambler side, you will just break even. And that is the rules for the IRS.
Yeah, and I don't think there's carryovers to the next year. Let's say you had win 2020, loss 2021, win in 2021. You can't deduct your losses from 2020.
Yeah, I know. Yep, you can. And I feel bad. I've gotten that question. I'm like, listen, there's really nothing that you can do because the rules set forth are you can't go below zero. And you can't have what's called an NOL to carry forward. So yeah, it sucks. It's tough. It's tough to hear that.
Yeah, I mean, I luckily enough haven't had to deal with that at all.
Good.
But I mean, I've come close in a year, but ended up being up a small amount. But yeah, it's always interesting, kind of planning for that later on in the year. Be like, all right, I'm close to even. Do I want to continue with my same volume or cut it down, knowing that I could potentially be at a net operating loss and those tax advantages are kind of going to be gone. And like, let's say you're a professional gambler, you're up $3K or $2K in December. Like, this has been a bad year for you. Maybe you need a new computer. Maybe you need a nice new computer to help you run all the programs and everything. Could potentially be a spot where, all right, maybe I should wait until January of the next year to buy it, knowing that it'll be under that taxable year, and this was an aberration of a year. I'm likely to be up a lot of money. So a lot of expenses you can put into the next year by deferring buying those items and taking those tax breaks until the next year.
Yeah, no, it's definitely it's definitely a unique idea, right? To say, hey, listen, I'm going to defer purchasing things because, it just was a tough year, and if I spend $5,000, I'm only going to be able to deduct $3,000, right? If you had $2,000 net winnings. So ultimately, what I tell people is just to have good record keeping. I mean, if you're doing this much volume and if you're into this and you are a professional gambler, then you should have some really intricate Excel spreadsheets that are keeping track of your bankroll and how you're doing and what your hit percentage is and things of that nature, because you're going to be constantly analyzing your bets, your unit play, you name it. So that all that information should be there, and you are a business owner, right? You have to make those decisions, and that will be beneficial to you. And so yeah, that's a good idea.
All right, and then anything else like? I know we vaguely went over rainmakers. It's something we can get into because I know that's a very complicated with NFTs and stuff like that.
Yeah, that's another fun thing that came out.
Yeah, so go ahead and tell us a little bit about like crypto and NFTs in this space, and maybe anything else you want to say in other spaces. Because I mean, I've lost a lot of money on NFTs and crypto.
Yeah. Oh yeah.
Well, not a lot of money, but I've not done well with those, so I just kind of stay away from them for right now. But I know a lot of people listening to this are heavily involved in that, and a lot of people are probably in rainmakers.
Right, exactly. And we've definitely have a couple clients that have been that did rainmakers, and it's a unique situation, right? Because you're taking two concepts, two ideas, right? You're purchasing, NFTs and player cards, in which then you could utilize and go into prize pools, and you could play DFS using those cards. And on top of that, you could trade those cards, and there's a value to it, or there was a value at the beginning of the session. And what's happening is, some of the questions I'm getting is that, after like 5 weeks, the value in the marketplace decreases, and you spend $2,000, $10,000 on these NFTs, and now the value in the marketplace is $1,000. And what happens is this: there are two transactions at play, right? There's the DFS side of things, in which you're playing with those cards. That income from those prize pools that you've won, that's going to be included in your 1099 miscellaneous from, and from the operators. So, but the NFTs, you're actually holding on to an asset, and you go into this world where you're this collectible item, this capital, similar to stock, where there's a purchase date and there's a sell date. And when you sell it, and if you sell at a loss, that's the time where you get to recognize that loss right there. It's very unique, and there's a lot to go through. So if there's anyone that has any questions, I'd be more than happy to go through. It's just, you have to think of it as two things. You have NFTs right here that hold value, that is an asset, and then you have the DFS activities in which you've either won or lost from. And then there's all the other things as well. So definitely interesting stuff. There's always something new every year, right?
Yep. No, I mean, I was an accountant for several years. My dad's an accountant. Yeah. A lot of my family members are accountants. So I've constantly been involved in like figuring out the best things to do, the best tax planning throughout the course of the year. And it's been nice having an accountant of 40 years in the family to help me through these things.
That's right.
Saved me a significant amount of money.
No, for sure.
Yeah, so I mean, if someone needs DFS accounting advice, what do you guys have to offer them? Like, heard you have a free consult,
right?
What does DFS accounting offer? And just go give us a plug why it's important, because I know why having an accountant is important. And
for sure,
I highly suggest it for anyone who's making even a moderate amount of money.
Yeah, exactly. And what we've done is this: everyone has their own unique situations, right? It's really tough to apply a standard thought process, right? It's tough to throw out in these podcasts or in an article that you have to do annual sessions. That's exactly what the IRS wants you to do, because that's just not the case. Everyone is unique. Everyone's tax situation is unique, and you have to understand that their situations. So what we do is we have a 30-minute free consultation just to get to know the individual. Let them just talk about their tax situation and answer or ask any questions they may have. And we go from there. And then what we do is it's very nonchalant, right? We don't do a hard sell. We just really want to help out the community, right? I'm in the community. I did some arbing, and I do some side plays, things of that nature. I used to do DFS, but I got my butt kicked, so I stopped. But then ultimately, we're just trying to help, because it's really, the area is really great, and the IRS takes their sweet time updating their rules for things that are moving at the speed of light, right? All of a sudden, Rainmakers comes on, and really there are no tax rules that are associated with this type of activity. So we have to bob and weave, and we're here to help out and hopefully put you guys at ease.
Yeah, and then how do How would they contact DFS Accounting?
Yeah, that's a good question. Forgot about that. You can contact us at info@dfsaccounting.com. Info@dfsaccounting.com. And we'll promptly reply. I mean, we're in tax season mode right now, so we're going to try our best within 24 hours, but it might take 1 or 2 days. But we'll be looking forward to talking with you.
Yeah, well, Mike, thanks for joining me. Really
No problem.
appreciate
Thanks for
it.
having me.
Lots of good info.
All right.
That should do it. Good luck on tax season, and
Thank you.
reach
Likewise.
out to DFS Accounting, guys. We're out.
All right. Have a good day.
Later, kids.